The headlines are all saying that bonds pierced 5%. But as far as I can tell, they only did it in the after hours, and they're below 5% now. As I noted, I don't think it matters if they're above 5%. We've been above 5% before. It's not a big deal. It's just one of those round numbers, and there's no scientific or financial reason for that to matter at all. However, the market right now is responding as if it was the biggest news ever. I don't think that's going to continue as the day goes on. Tesla's down a bit stronger than the NASDAQ, and it's down more than its peers, but I don't think that will hold up either during the day, and Tesla will just bounce back stronger when the sell-off exhausts itself and the bargain hunters get active. This is Randy Kirk. Please hit like if you want to encourage me to get up early in the morning and find out all this interesting news for you. I've got a story later I think you're really going to like. You also have later today, you've got Brian White coming on, and you know you like that. So that's going to be, it should be super interesting this week as we go into all the crazy stuff that's happening this week. Hit subscribe and notify so that you make sure that you hear about all upcoming shows. And then, of course, join Patreon. And thank you for all the folks that have joined so far this month. One of my most successful months ever in Patreon, but I need more. We need more and more. Okay, Elon Musk posted this morning on X. I said we would advertise. We are doing so at a small scale, and we will do so at a larger scale as we figure out what works best. Okay, well, there you go. Now you've got your advertising. I will comment later, maybe tomorrow morning, maybe tonight. Not sure about the advertising thing. Yeah, I've got a lot of ideas about what would work best. And I have a lot of experience in that category, but we won't go into that right now because I got some other stuff that I think is really interesting. So the markets got squirrely overnight. Bond yields, they made another run at 5%, but they're still below. Tesla so far, following the NASDAQ, a little bit stronger. I think right now we're looking for a repeat of Friday, and it might not recover. And I'm beginning to wonder if, I know I said that the Israel conflict and what's going on in Ukraine is not having any effect on the markets. I'm beginning to wonder if there isn't kind of a giant pall, kind of a thing, and I think I want to stand back for the market a little bit as I watch this Israeli thing play out. I'm not saying that's what Randy's doing. I'm wondering if that's happening. Anyway, that might be what's going on. And that might be why Friday and today there's no other news. I mean, there really isn't any significant news other than what's going on over there. And that might be causing the market to be a little bit off. Anyway, Tesla said on Monday that its capital expenditure for 2023 will exceed the 7 to 9 billion target it had laid out earlier this year as the electric vehicle maker ramps up output at its factories and gears up to roll out new products. Now, that's not the only news there is that it's going to actually be more than the 7 to 9 billion. They went on to say that there will be a return to that 7 to 9 billion range in 2024. Sawyer Merritt is reporting this morning that the Tesla Model 3 all-wheel drive is found to be the least stolen vehicle in the U.S. Well, I guess it's not a shock that Teslas would be the least stolen since they've got Sentry cameras and almost impossible. I mean, how do you turn it on if you don't have the phone? I mean, it's really, yeah, not a surprise. Okay. But this one is more confusing. It might not even be news. And this is from, I wrote that down. Anyway, it's from an Indian newspaper, online paper. And I'll let you be the judge of whether there's anything here to talk about. In a candid conversation, Nitin Gadkari, India's Minister for Road Transportation Highways, made it abundantly clear Tesla's welcome in India, but there's a catch. If Tesla manufactures locally in India, they'll get concessions. But selling Chinese units made here, no concessions. So I don't know if that's news or not. Seems like that's what we knew. All right, I'm not sure. All right. So last week, the buzz had it that to boost domestic production, the central government might slash import duties for companies like Tesla, but only if they commit to local manufacturing. The potential policy could see import duties on eco-friendly cars plummet from a whopping 100% to a mere 15%, providing these automakers kickstart their Indian manufacturing ventures and source components locally. Okay, I think that's what we knew. So I'm not sure there's news there. Earlier this year, economists and Federal Reserve officials predicted that the U.S. economy would be sputtering by now as higher rates cut into spending and investment. But the opposite is happening. I forgot to source this article. I'll put it down. I'll try to remember to put it down in the first comment as to where this source comes from. But this is a super good, super interesting article. The opposite of that is happening. Recent economic data suggests the economy is accelerating despite higher borrowing costs, the resumption of the student loan payments, and regardless of the wars in the Ukraine and Middle East. Analysts, many of whom had expected a recession this year, are pushing up their forecasts. Goldman Sachs economists last week raised their growth estimate for the third quarter ended on September 30th to an annual rate of 4%. They had been at 3.7%. High Frequency Economics, an economic consulting firm, raised its third quarter forecast to 4.6 from 4.4 and its fourth quarter forecast to 1.2 from 1%. A figure in that forecast range for the third quarter would represent accelerating from 2.2% growth in the first quarter and 2.1% in the second. The Commerce Department reports that this is what they're expecting. So a banner September by some, whoops, there's something wrong here. some error in my stuff. By some measures, the labor market actually got stronger over the course of the third quarter. Employers added 336 jobs in September. We know that's all, we've been all through that. Hiring is spending, new fueling. Of course it is. Monthly retail and food service sales were up 0.7% after being up 0.8% in August. So manufacturing, which was sagging in the spring, is showing signs of rebounding. Factory output ticked up. Fed data showed Tuesday after declining 1.1%, it was up 0.4%. Big banks such as Citigroup and JP Morgan Chase reported strong earnings this month, and executives say their outlook on the economy has improved. American Airlines also said Thursday it expects travel demand in this holiday season to be stronger than last year's. Maybe people are going to spend the money on flying to friends and family rather than on gifts. Despite this momentum, inflation has continued to ease to 3.7 in September. We already know all this, but I'm just pulling it all together in this article. This has allowed Fed officials to indicate they will hold off. The Fed has raised interest rates to a 22-year high, but now we think they'll hold off in November. They're proceeding carefully. Falling inflation boosts purchasing power. There are several possible drivers for the recent acceleration. First, the combination of cooler inflation and still strong wage increases mean that paychecks go further. Between December and June, inflation-adjusted incomes after taxes rose at an annualized rate of 7%. That pushed up household savings rate to 5.3% in May. Now, we know that's all come down now. During the third quarter, households began to run down those savings, fueling new spending now, but the savings rate fell to 3.9% in August. But as you know, Bank of America has been saying that people still have plenty of spendable. Receding fears of a recession could also be making households more comfortable spending money, especially now that it appears the economy has shrugged off the effects of failures of the Silicon Valley Bank, Signature Bank, etc. After predicting a recession for the past year, economists surveyed by the Wall Street Journal earlier this month say they now believe the economy will avoid a downturn in the next 12 months. There is the muted impact of higher rates. Meanwhile, the Fed's interest rate increases haven't had the expected cooling effect. This could be because businesses and households locked in lower interest rates during the pandemic. That's part of it. But part of it is that we've now done that huge increase and people have adjusted. We also know that small businesses said earlier this month that only 2% of them are worried about the high rates are about being not being difficult to borrow, only 2%. We also know that mid caps and larger caps are sitting pretty well financially in terms of their balance sheets. Indeed, economists at Jefferies found corporate interest expenses as a share of revenue have been declining over the past year, despite those increases. And while higher mortgage rates make it harder to finance new home purchases, roughly 14 million homeowners refinanced during the pandemic. We know that their rates are under 3%. This has allowed many families mortgage payments, and in some cases lowered their mortgage payments and allowed them to cash out some home equity, boosting household savings by almost $400 billion during the second quarter. Where does the economy go from here? Economists point to three possible outcomes. First, the momentum might be short-lived. Even though hourly wages are going up, workers are working fewer hours. Because they're taking second jobs. We realized that from the last two reports. Year-over-year weekly wages adjusted for inflation fell 0.2% in September, the first decline since May. However, if this continues, it says households could be pulling back, but people are taking the second job. That's why they can't work any overtime. Second, the economy could continue to run hot and send inflation up again. This could prompt the Fed to raise interest rates further, but there's no evidence, there's no indication, there's no place, there's no part of the economy, there's no are those inflationary numbers going to come from? So a Goldilocks scenario would be third. Growth could stay strong. Inflation remain under control. This would be the best of all worlds because it could imply higher productivity. Oh, higher productivity, meaning that the economy could produce more goods and services without bottlenecks that lead to inflation. In this case, stronger growth could continue without the Fed having to raise interest rates. There are some signs of promise. The proportion of working age people in the labor force, that is, those who are working or looking for work, is the highest in more than 2 decades. That suggests job growth can stay high without employers having to boost wages so much that they might have to raise prices. And we're seeing this wage inflation not being an issue. And the transition to cleaner energy sources is sparking new business investment thanks to federal subsidies. Private sector non-residential spending amounted to 14.7% of inflation-adjusted gross domestic product in the second quarter of the year, the highest year in records going back to 2007. For now, many economists are reluctant to embrace the upbeat scenario. However, one economist, Ben Herzon, at S&P Global said, has the economy shifted in a way that we don't have to worry about inflation pressures from a tight labor market? I don't think that's the case, he says. I do think that's the case. Market Watch points to some negative stock moves as earnings have come in. That negative reaction has occurred even as earnings per share have come in at a solid 7%, more than expected. And sales have also slightly beat expectations. But since the end of August, expectations for S&P earnings this year have dropped by 0.9% and then dropped for another 0.6% going forward in 2024. Wilson adds that the breadth of the market continues to exhibit notable weakness. We have not seen that rotation into the broader indices. We have not seen the small caps and mid caps begin to get any of this money. While some may interpret this as a bullish signal, i.e. oversold conditions in those markets, we believe it is a reflection of our longstanding view that we remain in a late cycle backdrop where earnings fundamentals remain at risk, he says. I don't think so. I think I think it's an oversold condition, and there's an opportunity now for this rotation, and we see the rest of the market pick up. Forbes, however, answers with this. Interest rate spikes occurred in October. Some of it is likely due to supply issues, both new issuance and sales of significant amounts of U.S. treasuries by China and by Japan, and I'm adding this, and by Japan and by the Fed. More importantly, we think much of the run-up is a result of higher risk perception requiring higher returns due to the conflict in the Middle East. So this could be one of those pulls. It might be these combination of effects that are causing us to sit close to 5%, and that might be what's going on. They go on to say, while the hard data still shows economic growth, our view is that we've missed the opportunity for a soft landing, and the recession has either started already. What? There's absolutely no evidence of that, or is imminent. Monetary policy is quite tight, and monetary aggregates are now negative on a year-over-year basis for the first time historically. The real rate of inflation with current shelter costs is lower than the Fed's 2% target. Note to Chairman Powell, any hope of a soft landing would dictate that the Fed pivot now. And he says there's not a chance of that. Powell and company appear more concerned about lagging and coincident indicators than about the leading ones. Internationally, China appears to be in a recession. That can only have a deflationary impact on the rest of the world. With all of that in mind, with all of what I just said in mind, unlike Forbes, I can't see any chance of an actual recession. Could we technically get 1 or 2 quarters of slightly negative growth again like we did last year? Yes, but I even don't think that's going to happen. None of these 3 articles say, well, I'm sorry, I said this earlier and I was wrong. One of the articles even mentions productivity, and that is what you need to add into the mix. Then you get a solid recovery continuing with no inflation and dropping interest rates. I know all of this sounds so optimistically randy, but so far, who has been right? I've been saying no inflation. I've been saying no increases in interest rates. I've been saying no recession. I've been saying that now for months and months and months. I continue to believe that's what's going to happen. Trueflation this morning is trying to help me out on those by saying that inflation is still sitting at 2.34. It's been very flat for about a week. Tesla is likely to follow the NASDAQ around during this week, even though maybe Elon's promise to increase advertising could tease a few dollars off the sideline. Let's take a look at where things are in the market right now. We have Tesla still, I would say significantly down more than the NASDAQ this morning. It's down 2.66%, with the NASDAQ only down 0.22. So this is not like a double or a triple. This is multiple times. So, but Tesla is heading back up this morning, as is the general market. I think by the end of the day, we're going to be in the green. There isn't any reason for the bargain hunters not to come in at this point and start putting money into all these things. We got all the Magnificent except for, we have mixed on the Magnificent 7, half up, half down. Magnificent 8, I guess they call it now. And we have the same thing with the Cathie Wood high-risk stocks. So yeah, I think we're going back into the green. Everything indicates everything's pushing that direction. Maybe based on what I'm seeing on Tesla now, maybe not as strongly as the NASDAQ. I really think overall, I still believe it. I'm going to continue to say it. I think Tesla follows the NASDAQ this week, barring any news. All right, let's look at what is going on in the other stuff here. Okay, we have got the dollar back going up a little bit, solid and slightly up. We've got gold. We've got gold down, but still up there at 10. At 1983. Down $10, but still very close to 2,000. We have got what happened here? This thing is all messed up this morning. I'm so sorry. We have got Bitcoin doing extremely well. I don't know why. Really, I don't. It's over 30,000 at 30,621. Okay, now let's go into the oil market. Is down this morning, almost $1, 87 bucks. This is lovely. This is exactly what we see, and it's happening in spite of the war. I don't know. You tell me. Okay, bonds. We're sitting at 4.931. We are up not even a 1 basis point. So it's the headline: 10-year Treasury yields climb back about 5%, and it's sitting here at 4.931. I just don't get it. I haven't seen it at 5% during regular trading hours. Okay, let's look inside. Let's take a look. I just want to see. So the 2-month is unchanged. The 2-year is up 2 basis points. The 10-year is now still the same, up less than 1 basis point. And the 3-year is up less than 1 basis point. So no real news there. We're sitting really, really flat on that. More indication to me that overall we will be up later in the day. And we'll just take another quick look here. Again, everything is tending towards moving toward the green at this point, but not back in the green yet. Okay, so another reminder, if you would, that we will have Brian White on around noon today. So you want to hit like right now, subscribe, and notify. Make sure that you're made aware of Brian coming on later today. And then, of course, as the week progresses, we will have so many things coming in from earnings and also from reporting leading up to the big Friday. No Fed speakers this week. So that's good news. And then, of course, potentially you'd like to get yourself, a couple of these Cybertruck bottle openers. I'm just going to repeat my deal right now: 3 for $65. So you get 1 for 25, 2 for 45, and 3 for 65. And if you want to buy a bunch more than that, the information is all down below. If you want to buy 10 or 20, I've got all those numbers down below. And you can figure out what the other numbers might be. This is one of the greatest Christmas gifts, birthday gifts, whatever gift, any kind of gift you need, office gift. Give it to one of your buyers, because usually they have a $25 limit for giving gifts to your buyers. Anyway, I just highly recommend that you get involved in the big Cybertruck movement and put it on your refrigerator because it's cool. It really is cool. And then join Patreon. News every day, almost every day. Hey, look, I'm not going to fill your inbox up if there is no news that I think is relevant or important. That way, when you do see that there's something in your inbox from Patreon, you're going to go, oh yeah, that must be important, because Randy's only putting the important stuff in. So over the weekend, believe it or not, all day Saturday and Sunday, I think I only posted once over the weekend because there just wasn't anything newsworthy. And that's how I work it. So you can try that. You can do a 7-day trial, no obligation, no money, nothing. 7-day free trial at the $5 level or the $10 level. And if you go into the $5 level, of course, you can get 1 free audio book of my various books that are out. And if you do if you do the $10 level, you get 2 books, or you get a free Cybertruck bottle opener. All right. One final and last look just to see if anything has changed. And we have, we're topping off now on Tesla. The market is continuing up strong. Tesla is saying, maybe not so much. So it's still down 3% at 205. Some people think we're going to have to test 200. Maybe they're right. It could happen. All right. That's all I got for you this morning. It has been great talking to you.